And good afternoon. Welcome into a Monday, November 30th, 2020 edition of Market Talk. I'm your host, Jesse Allen. Great to have you here with us on the final day of the month. And you can find us online, markettalkag.com, Facebook, Twitter, Instagram. It is all at Market Talk Ag. A rather rough day in the grain and oilseed markets today as we wrap up the month of November. Let's talk about it. He is a senior market advisor with Total Farm Marketing by Stewart-Peterson. Let's bring in our good friend, Bryan Doherty, today. Bryan, how are you?
I am great. I hope everybody had a safe Thanksgiving. I know COVID's kind of rearing its head in a lot of spots, but we're good. We did have some really interesting market activity today because it had some chart implications that you don't want to ignore. So we need to address those, particularly in the corn and soybean markets.
Yeah, Bryan, let's jump into this. And I know soybeans, especially today, we're down 23, 22 cents across the board, really kind of jumped back in that 1160 range, 1170 range, kind of sandwiched in there on the futures side. Is this a sign that this soybean run is over, or is this a temporary, move of maybe just some profit taking and some selling here to round out the month?
Yeah, my instinct would say it's probably rounding out the end of the month. We did start with overnight trade a little bit firmer, and then we really kind of took it in the chin. The beans took it in the chin and dropped under the 10-day moving average for the first time in just about a month. So if you think about that, a 10-day moving average, that's average price for 10 days, would tell me we're losing our momentum. The backdrop of that is pretty good chances of rain on large portions of South America, in particular, kind of that southern heavy growing region. I didn't think, with export inspections as good as they were just outstanding today. With that news, I thought that might have held beans, but it seems like the market's either focused on the forecast for rain, or traders ran stops up pretty tight. But we're just under 78 million bushels on that export inspection, and so they're just blistering. Or 980 million bushels year to date. Marketing year starts September 1st. So that's a lot of bushels, and it's 2/3 or 67% higher than it was a year ago at this time. But what I was getting at here is when you have a day where the range is larger than the previous day, and you're challenging or at new contract highs, and you finish like we did, that's not a real warm and fuzzy finish. And we saw that in corn as well. So we'll see if the focus is on better growing conditions in South America, or if this is just month-end liquidation. If it's better growing conditions, we may have seen the high.
And I think that might have some producers maybe concerned a little bit. I'm sure you fielded calls today about, okay, what's going on with beans? Do I need to get some protection and a floor under me now at this point if I haven't already? I'm going to assume that's probably some of the questions you've been getting today.
You bet. We do. But they're not that many. And the reason they're not that many is because many producers have sold most of their beans already, and as they should. When you have a rally in a market into the fall and you have a good crop, which we did, you want to make sure and capture that pay raise in inventory. Yet those who are holding out or have that last 10, 20, 30, 50%, really take into account today's warning. And I would suggest be more strategic in nature. This is your warning shot across the bow. Either buy a put against these, sell the beans, or if you sell them and you want to stay in the market, then look at some kind of a call or bull call spread where you buy a call, sell a call, some kind of strategy. I think to sit and do nothing, that's worked really well, but at some point it can be not really well. And I don't think with this kind of run in the market and signals like we're getting, I would be careful.
Well, Bryan, let's move over to corn. And I know you want to talk there as well. We were down 5 to 7 cents today. That March contract at 426 that closed down 7 3/4. Just looking at this corn market in general, what are your concerns there after today?
Well, it's again a technical signal today where corn futures did make new highs today. So you've got all this strength on the overnight, and into the early morning, and then you lose it. And then you lose it in a bigger way as the day wears on. Now, it certainly didn't look to me like corn was a leader of this dump out. It was wheat and soybeans.
Mm-hmm.
And those two had maybe what I'm going to call a little more weather related weakness. Corn, sources out of South America probably have downgraded the first crop corn, maybe 1 million, maybe 2 million metric tons, which isn't a significant amount, but it's enough to say, hey, that crop it's not going to be record large.
Mm-hmm.
It suffered too much dry. The big crop though is that second crop, safrina. So if you can get this bean crop on track and come up real quickly with corn behind it, there may not be any cause for concern, but the bean crop got planted so late in areas that those particular areas that are going to take an extra couple of weeks to mature the bean crop, that's the concern that the corn producers are going to have in that part of the world, trying to avoid that heat and dry out weather. But hey, today, Jesse, just not a real good signal. I'm just looking at my chart here, and when I look at something like the March contract, and it just blazes, let's say, higher on the overnight trade and hit our yearly high here of 439.5 and reverse down. Wasn't a horrible close at 426, down 7 3/4, but that's not a great way to start the week.
No, not a great way to start the week. And, I think about this too on the flip side. Like you mentioned, a lot of producers have sold soybeans, but I know quite a few producers who've been holding corn in the bins because soybeans have been so good with price action. So, begs the question, if I'm sitting on a lot of corn, what's my move here?
Yeah. I think the move is you make a sale of some type. You just have to reward this market. Remember, we started this down at 320 on December corn.
Mm-hmm.
And so December corn reaching a high today of 430, $1.10 rally. So if you're a little distraught that, well, you're not going to get 430, remember today's close is 419 3/4. You're still, what is that? $1.30. You're still selling at $1.20 higher. But I think it's time to reward the market. I know a lot of farmers, as you indicated, I know them too. They sold a lot of beans. The market told them to. There's inversion in the market. Said, sell your beans. Farmers sold the beans, stored the corn. They finished up harvest, shut the doors. A lot of them, fortunately, are in a situation where they say, well, I really don't want to sell corn maybe even this year. I
Mm-hmm.
want to wait for taxes and those things. But I think you need to reward this rally here and be strategic. Work with somebody where you're one phone call away from being able to own whatever you want. It doesn't have to be in a storage bin.
Brian, you mentioned this earlier as well, and the largest percentage loser today was that March Chicago wheat contract. Let's look at the wheat market. Pretty rough day there, whether you're looking at Chicago wheat or hard red winter wheat. Spring wheat was down too. I mean, this is a market we've been concerned about with weather conditions and more across the entire globe, not just here in the U.S. What's the outlook for this wheat market here as we move into December?
Yeah, that's it's the market right here that probably has the most concerning technical activity. Fundamentally, the last USDA report again, you're near world record supplies or inventory.
Mm-hmm.
So the news today was Russia indicated they may be willing to sell a little more than they said before. That sent a negative shot across the bow. A little better weather forecast for the Black Sea region as well. So kind of a double whammy. But also you've got the March wheat contract in Chicago today closing decisively below the 50-day moving average. It edged below it here last week, holiday week, but a real decisive close below it. That's the first time you've seen that since the beginning of the third week of August. So
Mm-hmm.
a real technical challenge and head and shoulders formation. That points to lower. Failure at support, breaking below the low in that chart from November 13th. That technical picture really was bruised today. It looked pretty good early last week and looks pretty lousy early this week.
There's a lot of concern out there in the market, and I think just overall on the grain and oilseed side, if I'm a producer, from the sound of it, probably need to start looking at making some sales, depending on your situation, or at least getting some protection underneath it, whether it's corn, beans, wheat, etc.
Yeah, it's rewarding the rally, recognizing that
Mhm.
prices don't go up forever. It's being strategic. Um, I wouldn't say that we've had this plethora of negative news, but the news we have gotten the last, let's say, week, most of it's been, I'm going to say, slanted a little negative or construed negative
Mhm.
in nature. And when you're at the top of a range, if you can't feed that bull, that's a concern. And today's just one of those days. I go back to the corn market. Boy, it really looked good overnight. Beans look good. Beans were 11.99 in January, and just a sliver under 12 in the March contract, 11.99 and three quarters, just looking like they were kind of ready to bust out, and they reversed down. So we just have to be cognizant of these reversals where, everybody says, well, don't time the market, but you still have to be cognizant of some of the signals. And if you know the signals there and you don't act, and 3 weeks from now things are much weaker, I think you're going to have a lot of regret.
Yeah. Something to watch. We know this market can be interesting, volatile. It can change on a dime, but definitely, I want to look at some of those signals when they're out there. Brian, let's switch over to livestock. Um, Hogs today were higher. Feeder cattle were higher. The live cattle side was a little bit lower. Let's start on this hog market first, and just what are you seeing here as we round out the month and head towards next week? A decent day there on the future side.
Yeah, and a decent comeback. And if we talked a week ago, or 2 weeks ago, we're saying, "Ew, this hog thing looks pretty sour," and here they pick up $5 in the front month. That's export business. That's that type of activity. It may also be just short covering. A lot of volatility, but I can't, from a personal perspective, I just can't get through I can't get beyond the daily slaughter numbers continue to run large. And when we see those type of numbers and, well over 2 million on a weekly base, ew. Now, whether this is just retail stocking up on products and ham for the holiday season, I don't know. It does look like the good news is restaurants are struggling. That's not the good news, but the good news is
Mhm.
the consumers, they're buying and eating. And I think that's helped hogs cause. I just can't get too friendly on hogs, though, Jesse. That's a tough market. I'd be more inclined to watch this really closely, and if we don't follow through, I think you want to be a protector in hogs. I would use put options.
Sure. And we know there's not as many independent hog producers out there these days, but there are still quite a few. And I know this is something they'll be watching. And, obviously you mentioned COVID at the top of the program, and that's going to factor in here as well the next couple of months, just whether or not we get a vaccine. And also, it's going to factor into restaurant slowdowns and where people eating more at home. And that's going to factor into both the pork and the beef markets right now.
Yeah, for sure. The good news is I read an article this morning, and it just seems like even though there's COVID and it's spiking, the packing plants are running pretty much without a hitch. And
That's good news for sure.
I want to think so. Which bleeds us over maybe into the live market there. Boy, you sure want to be friendly, but it's not really taking off. It's well supported. It doesn't look weak. It's kind of stuck in that range bound area. I'll give you an example. I'm looking right now at the Feb contract and finished today at 112.87. I can go back every month since July, and we've been at 112. So it's been higher, it's been lower. We were down to 106 there in October when we felt we hit maybe the fall low or the seasonal low, and high about 116, but we're kind of right in the middle of that range. And I think that's just reflective of kind of the uncertainty. We've got good demand, but not sure it can hold through on higher prices.
Mhm.
Today might have been also, end of the month type stuff in some of the markets. We didn't mention that earlier. Maybe there's some position squaring there. Um, but I think cattle, if I could argue, I think they're probably destined for sideways to higher into the April window. And the feeder market, I think you want to look at dips as picking up the feeders is what you want to do. I think with corn prices, um, probably not in a position to take off.
Mhm.
You pick up your feeders on the price dips, and that those are some charts that look probably as friendly as anything right now.
I did see box beef prices were higher today, up a little over a buck, almost a buck 50 in select. So that's at least a decent little sign there. But you're right, this cattle market just seems to be fairly range bound for the last couple of months, and It's kind of one of those things as a producer. You kind of used to these numbers, seeing these numbers on the board here the last few months.
Right. And, a lot of the time you mentioned the select cuts. So what we might want to just look at as we're trying to analyze the market is maybe seeing what the spread is between those choice and select, and see if feedlots are current or behind. And, you've got good value out there, 244 in the choice, 222 in the select. That tells us the feedlots are current. You got a $20 spread in there. That's good underlying support. So really tough to be negative cattle right now. That's why I said I think the sideways to higher. If they were to take off and go another $10 or $15 higher, I guess it wouldn't surprise me. I just don't know if I see that in the cards right now.
Sure. Brian, do you have a dairy update for us here on this Monday by chance? What are we seeing in that market?
That's kind of a sore market. The deferred months are really, I think, in trouble. Hopefully I'm wrong on that, but as we look at the most recent milk, the production reports, you're up 2.2%, actually 2.5%. That's just a lot of milk in November over the October. Production per cow is up. Milk cows are up. It's an industry that certainly takes advantage of higher prices. So the deferred months are priced where they are, which is at a deep discount to front month November. In fact, that this distance between November futures and December is about $8. I don't recall ever seeing that. Now, I had one dairy farmer I talked to today. He thought that happened like in, I don't know, I don't remember what year. I don't think it was 2009, but anyway, that's more of a reflection of school lunchbox programs and government spending to pull cheese off the market. And the deferred months are reflecting cheese on the market, in essence. And that's unfortunately, I think that's a market that has room to move down on those deferred months.
Yeah. A lot of things out there, this market to watch out for, and a lot of producers going to be asking questions. Any other final thoughts today, Brian?
I think just stay really vigilant. We're at a time of the year where around Thanksgiving, that's usually not the time to be thinking about new crop sales. And but in recent years, we peaked in October last year. This year so far, we peaked in October or November. Could be December, but it's in these fall months when in the grains, we traditionally don't see that. So if we look at bean highs here, we're the last day of November, and corn highs, that kind of could be it. And so I think you want to concentrate a little bit on that value proposition, especially when you see something like November beans over 1050, and now they're a little bit under it today. But that's a price we really would have we're starved for 3 years, and all of a sudden we hit it. So don't look down your nose at it too hard, because right now the bean corn price ratios favors planting soybean acres. So, look at the value on those first, I would say anywhere from 25 to 35% of your expected production, sell the value and hope you're wrong.
There you go. Brian, if producers want to reach out to you, get a little help from you at Total Farm Marketing, what's the best way to do that?
Yeah, best way, just give me a phone call, 800-334-9779. Ask for Bryan Doherty or extension, let's go with extension 444. We're changing over our phone system here, but I think that's how that's going to work yet. Or extension 300. They'll get it through to get you through to me. But let's talk about some of the market volatility and different ways to shift that risk.
Brian, it's always a pleasure, and I appreciate it and look forward to chatting with you again next week. Thanks so much.
We thank you for the opportunity, and we wish everybody the best of health and good luck.
Bryan Doherty with Total Farm Marketing by Stewart-Peterson, our guest today here on Market Talk. Find us online, markettalkag.com, and on all of your favorite podcast sources, including Spotify, Apple Podcasts, iHeartRadio, and so many more. This has been the Monday, November 30th, 2020 edition of Market Talk. I'm your host, Jesse Allen. Have a great afternoon.